Hey guys, and welcome to the Working Money Channel. First off, I wanted to say that this episode is the 3,000th episode of Working Money Channel. So thank you guys all so much for contributing to, me basically doing this for this long. I wouldn't be able to do it without you guys. So just wanted to mention that 3,000 episodes of Working Money Channel. Boy, started this channel back in June of 2018 and have been going full steam ahead since. So just wanted to mention that. And thank you guys for helping me make this happen. It really does mean a lot. Anyway, let's get into it. This is actually an incredible insight into what I've been noticing this cycle. This is coming from Nick here, guys. I mean, we legit have names like Blackrock, Franklin Templeton, etc., all jumping in heavy. This is happening at the same time that the majority of retail does not care, okay? This is one of the strangest cycles for sure. Let's see what the next few weeks and months ahead are like for crypto. And this is what I mean by this time it's going to be different. I know that, that saying is thrown around quite a bit. And, people who have been in the space for a while tend to roll their eyes. But guys, it is different. The circumstances are different. He was retweeting out Torre Cortan's tweet here, talking about this cycle being weird. It's like euphoria is here, but at the same time, we're all dead inside. For a lot of reasons, I feel like, many traders are just kind of, okay, let's get this thing over with. Let's just keep pumping so we can cash out. But unfortunately, that is not how it goes. Right now, we're still witnessing that retracement for Bitcoin. Bitcoin on the daily, guys, at least within the last 24 hours, we're seeing a bit of movement. We're seeing a bit of a spark for Bitcoin right now. Bitcoin is trading at 66,200 per coin. If I throw that on the hourly, you guys can see after this big push downward, we are now retracing. So coming up a little bit from this bottom level of about 64,500 per coin, Bitcoin is up roughly 2.6%. So it is a start. Still a lot of work to do, no doubt about that. And, before the halving, it generally happens that Bitcoin does retrace. We could start doing something like this for the next couple of weeks before the halving. And even post-halving, guys, we could still retrace a bit before that spark ignites and we go up higher. This is not unheard of. This happens quite frequently and has in the past. Let me get rid of some of this on the chart and just to show you guys post-halving periods from the past, which would bring us to, let's call it May 2020. In and around here, in May of 2020, this was the last Bitcoin halving. In and around here, we did see the market go down, retrace, come back up, and just kind of peter off. Up until the end of July 2020 before we really started to see the market pump again. And then even at this point, it wasn't buying it. We did make a higher low before we saw that move to the upside, that huge move to the upside that capped off the 2021 bull run. So this is going to take a long time. Some are predicting that this bull run is going to go into 2025. Myself included, I'm very optimistic that 2024 is just the beginning. We are likely going to start to see new all-time highs for altcoins this year. But really, guys, it's going to be about one thing, well, maybe a handful of different things. We're going to analyze that in this video. So right now, we are seeing greed at 71. It has gone down. No more extreme greed, and it has dropped quite significantly. We were in the 90s, then in the 80s for a little while, and now we were in the high 70s just yesterday, and now, guys, back to the low 70s for greed. The market cap is still sitting at 2.5 trillion. 24-hour volume is down by a little bit, so not as much trading volume right now. Bitcoin dominance, though, this is one of those factors. It is still at 52%. And this is important. I'm going to bring up the Bitcoin dominance chart in a second. So, okay, look at it. A bit of red, a bit of green, indecisive movement for the cryptocurrency space. Of course, some coins are up. Internet Computer up 10.7%, for example. Some coins are down. STX Stacks is down 5%, for example. But every coin is going to do their own thing in the grand scheme of things. Chasing coins is chasing coins, especially coins that have already pumped is not the name of this game. It is looking at trends, paying attention to what, the market is going to do next. And we generally tend to look at Bitcoin because it is the indicator. It is like the S&P of the crypto world, okay? Or the DJI, the Dow Jones, or the NASDAQ of the crypto world, okay? It's like an index to pay attention to in order to get a sense of where cryptocurrencies are going to go next. So remember, at the height of bull runs, when alt seasons really popped off, Bitcoin dominance came back down, and we saw it here. We saw it over here as well. So what did I say? That number was at 52% back in early 2018 when Bitcoin dominance did fall. It did go as low as 38%. And even back during the end of 2021 into early 2022, guys, we saw that go down to 39%. So right now at 52%, right up here, 53, 52, wherever it is. We still have a ways to go in this bull run. I think we're going to see Bitcoin gain a little more dominance before falling again. And guys, that denotes an altcoin rally. Very, very important. If you want to see when I'm going to be cashing out, I'm still getting my plans together. You can follow me at patreon.com/workingmoneychannel. It is only $5 a month. And I know I've been saying to my Patreon subscribers, I'm going to be getting an update for you guys very soon. I'm sorry, I've been on the road for a few days. Just got home yesterday and had to get my taxes ready and all that fun stuff. So please bear with me. I do have some great updates in the hopper, still ready to be recorded and posted over there at patreon.com/workingmoneychannel. And so this is the thing, right? Bitcoin is still technically in the pre-halving retrace phase of its cycle. This is coming from Rect Capital. But this phase is all about setting up the next big phase, the reaccumulation phase, which is in red down here on the chart. You guys can see that over here. Reaccumulation happening at this point in time. And what he's noting here is that we're still at the beginning of this, okay? We're not even in the depths of it. This could occur now for the next couple of months. The recent rejection from 70,000 has given us a better idea where to reaccumulate, where that range is going to be. Now it's all about figuring out where the reaccumulation range low will be, and that will be kind of, the sweet spot, I guess. For now, minus 18% pre-halving. Retrace has potentially marked the bottom of this reaccumulation range. If $60,000 continues to be the bottom, Bitcoin may consolidate between 60 and 70,000 for the coming weeks, going on into the halving and beyond. So again, remember what I told you about the halving of 2020 on the Bitcoin chart here? You should remember, I just said it a couple minutes ago, that this is going to retrace. Probably the halving occurred right in and around here. We did see a big dip. So what happens after the halving? The market doesn't just shoot up right away. It still finds its equilibrium, and then boom, a move to the upside. Within the coming months, though, we do see these types of parabolic moves. So something, again, to be noted, wanted to thank Rect Capital, and of course, Torre Cortan, or T, and Nick Crypto Crusader there on Twitter, cashed over here mentioning that XRP actually has not lost as much as some of these other altcoins. Dominance is still at 1.35%. Doesn't go up as much, but glad to see that at the moment it's holding while the rest of the market does sell off. So this was a tweet from yesterday afternoon. XRP price at the moment of this recording, we're seeing XRP starting to move up again. This is the daily. And you can see that candlestick there, that reversal candlestick for XRP on the daily. You can see, well, it's lost a little bit of ground now, but you can see it is trading in and around 58.5 cents. So similar to where we were actually yesterday morning when I was recording yesterday morning's video. In the meantime, though, we did see a dip all the way down to 55, give or take, and then all the way back up to 59.5. So maybe what we're seeing now is this boom, head and shoulders pattern, inverted head and shoulders pattern, excuse me, before we move to the upside. I don't know, it's anybody's guess. One thing I do know is that institutions are taking this opportunity to buy, guys. So buy when there's blood in the water. This is exactly what you're supposed to do. Buy when people are fearful. And I mean, we're not too fearful at this point. People are still in greed mode because they're still feeling the optimism in the market. Well, this is what Chad Steingraber is pointing out, okay? Retweeting out Thomas's tweet. And Blackrock bought the dip. Yeah. Apparently, Blackrock did buy about 2,300 Bitcoin, plus 2,300. Down here, it says 2.4K Bitcoin on April the 2nd, as soon as we saw that dip. So that brings up their Bitcoin total to 254,400 Bitcoin for their total IBIT BTC flows since its inception back in mid-January. So wow, you can see this is a great chart demonstrating how often BlackRock decided to buy the dip. Of course, they're taking this opportunity to purchase more. Are you really surprised, guys? Are you really surprised? Alex Thorne here also posting this. So notice what's happening in government. Likely the USG Silk Road coins were already sold, and this is post-trade settlement. So Blockworks did report this back in January. US filed a notice to sell $130 million in Bitcoin linked to the Silk Road agent. This was reported on January the 25th, and they were going to sell 130 million. But today, guys, they did move about 2,000 Bitcoin. So this was the original post here. Just to refresh your memory, the United States did file a notice to sell over 130 million in Bitcoin linked to the Silk Road forfeitures. And if you guys don't know what that is, do look it up. A very interesting story. Kind of a sad story, actually. The public notification lists 2 lots of Bitcoin that the government plans to sell. The first is roughly 2,800 Bitcoin for roughly $129 million. The second, smaller lot, would sell 58 Bitcoin for about $3 million. The Bitcoins are linked to Ryan Faras, who was sentenced in Maryland last year to 54 months in prison on a charge of money laundering conspiracy. Fast forward to today, though, guys, $2 billion in Silk Road Bitcoin seized by the DOJ has now moved to a new wallet. The crypto seized was connected to James Zong, who was convicted in 2022 of wire fraud related to the Silk Road marketplace. Roughly $2 billion in Bitcoin previously seized by the U.S. authorities and connected to the Silk Road marketplace has moved to a new address. According to data from the blockchain on April the 2nd, a wallet known to be associated with the U.S. Department of Justice made a 0.001 Bitcoin transaction to a Coinbase Prime account, possibly a test transaction. Shortly thereafter, the same wallet transferred 30,174 Bitcoin, or roughly $2 billion at the time of this publication, to a new address. And online sleuths have identified the DOJ wallet as that containing Bitcoin seized from James Zong, who in 2022 was convicted of charges connected to unlawfully obtained crypto from the Silk Road. So they are transacting that to their Coinbase Prime account. Coinbase, a big player in the space. We know Coinbase is also partnered with Blackrock for crypto custody solutions. So I would think the people over there at Coinbase would know a thing or two. And I think it does also speak volumes that the U.S. Department of Justice is using their trusted partner, in this case Coinbase, to send this money to. So, I mean, that's kind of what's happening on the face here. Something that I'm going to be keeping my eyes on for sure. It's great that we have the transparency with these types of transactions. You know, we don't want to see government Bitcoin suspiciously start creeping into, I don't know, maybe BlackRock's account. I don't know. I'm not accusing anybody of anything there. I'm just saying, the transparency is good for so many different reasons. Anyway, I wanted to thank Alex Thorne there and Chad Steingraber just for posting that. Now, XRP volume has also surged, guys, surged to a staggering 80% within the past 24 hours. So that is also positive news. This one coming from Michael Branch. Just yesterday, we heard the breaking news that Uphold has officially now started using XRP in the United States. I did a video on that. I will link it up here in the top right-hand corner. And so, this is a volatile period in crypto. The trading volume, is generally commensurate with spec trading. And as you guys know, over the last 24 hours, we're not seeing that much volume in the space, at least not now, but XRP volume specifically. And so this just makes me think, okay, this has to do with real world utility. Has surged by a staggering 80% within the past 24 hours, surpassing $4 billion in trading volume. So CoinGlass reports that derivatives alone accounted for $2.16 billion, while spot markets added an additional 1.9, marking a 55.4% increase from the previous day. Despite this substantial uptick, the token market capitalization stands at $32.5 billion, translating to a trading volume to market cap ratio of 12.5%, signaling active but not extraordinary trading. So we are seeing a little bit of an uptick. However, the surge in XRP trading activity occurred amid what can only be described as a crypto bloodbath. Liquidation statistics reveal that over $400 million worth of positions were forcibly closed, with an overwhelming majority, 85.5%, being long positions or purchases. The XRP market witnessed an even higher ratio, with 94% of liquidated futures positions representing long positions, totaling $5.47 million. And the rest is history. I think we know about the price action right now for XRP. Did already talk about that on the chart, just following the market. But it is, interesting still to be paying attention to the surging volume for XRP. So wanted to thank Michael Branch for posting that. Another one here from Michael Branch. Hester Peirce has actually taken another swipe at her agency. SEC's closed door policy stifling crypto innovation. This is what Hester Peirce, aka Crypto Mom, has now just come out and said. She stated this: Crypto Mom called for more positive engagement with crypto firms and fewer enforcement threats from the SEC. She has taken now another swipe at her agency, criticizing the regulator's guidance on crypto custody while calling for more interaction with the public. Speaking at the annual SEC Speakers Conference on April the 2nd, Peirce, also known by crypto enthusiasts as Crypto Mom, said that a particularly pernicious weed had sprung up in the SEC secret garden of policy guidelines. Her comments were made in response to the controversial staff accounting bulletin, and then she gives the number there. In March of 2022, the SEC issued the SAB 121, which outlines the regulator's accounting guidelines for institutions looking to custody crypto assets. Notably, SAB 121 prevents many banks from custodying crypto assets on behalf of clients. Peirce noted that SAB 121, issued without input from the banking sector, does not protect investors. Instead, keeps out experienced banks and broker-dealers from the crypto custody business due to its capital implications. So, looks as though there is work that still needs to be done. Here's a clip from the presentation. Not going to play you guys the full 7 minutes, but I will link it in the description of the video for you, courtesy of James Rule. Here's Hester Peirce.
Interactions with a regulator like the SEC are never stress-free, But the come in and talk to us mantra was a real invitation to have a genuine conversation about difficult issues. Productive interactions with the SEC these days are fewer and further between. When individuals and entities come to the SEC with their novel ideas, their feedback, their concerns, their objections, their questions about implementation of a new rule or application of an old one to new circumstances, too often they're met with crickets. Neither staff expertise nor issues ripe for analysis are lacking, so what has changed? In the past, the staff, in part, I think it's because the staff is run ragged by the rule writing agenda, right? So there's not a lot of bandwidth to think about these difficult issues. Remote work may also play a role. It's more difficult for staffers to spontaneously discuss with one another these difficult issues. But the root of the problem is that the Commission discourages the staff from offering much more than shrugs, silence, slow walking, sighs. The culture at the top of the SEC has changed, and that has led to a change across the whole agency in the way we interact with the public.
So not very optimistic about the SEC. And Hester Peirce has always been critical. She is not afraid to tell it like it is, at least in her view, from her perspective, of course. So anyway, again, this is a 7-minute clip. I only played you guys about the first 1 minute, 20 seconds, but I will link this in the description of the video for you. Wanted to thank James Rule for posting that, and of course, Michael Branch for the original article. XRP Drops here, bringing this up, okay? Maybe the SEC has other fish to fry, other things that they're focusing on at the moment. The real reason why the SEC might be going after Ethereum, don't think it's going to be an Ethereum case because of all the evidence gathered by crypto sleuths. Think of it as an evidence-gathering mission to prepare for litigation over a spot Ethereum ETF.
Utterly ridiculous at this point for the SEC to bring a case alleging ETH as a security. I don't think they're going to sue the ETH Foundation. I don't think this is going to be an ETH case. I think this is an evidence-gathering mission to prepare for litigation over the ETH spot ETF.
It's one thing and one thing only on the SEC's agenda: money, 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 right? They lose the Ripple case, and what are they going after? $2 billion in remuneration. Kind of ridiculous. They know they're probably not going to get that. And so, it's up to Ripple's lawyers at this point to, come up with a reasonable counter. And I guess the judge is going to have to decide. So, guys, unfortunately, this is what the crypto space has become. This is what regulation is. It's ugly, to say the least. But anyway, I wanted to thank XRP Drops just for posting that. Now, remember when I was talking about this, okay, $2 billion from the DOJ moving to Coinbase Prime. A trusted institution, obviously they have to have an account with the Department of Justice, also partnered with Blackrock. So my bet is, guys, when they're talking about tokenization happening this bull run, maybe this just proves the theory that I had that the real-world utility will occur by the end of 2024 into 2025. I've talked about this on this channel in the past. Of course, it's all been speculative. But guys, there's some more evidence now to suggest Coinbase probably has the inside scoop on this move, which means that possibly we could see XRP pump to exorbitant prices based on utility. And the reason I say that, guys, is because of this Anton Golub post here on his LinkedIn, retweeted out by XRP Drops. Coinbase claims the tokenization of real-world assets is going to be the key driver of the current bull market, okay? Anton Golub posted this over there on his LinkedIn. High-yield environment as an opportunity for tokenizing sovereign bonds, money market funds, and repos. Interest rates above 5% make the capital efficiency of instantaneous settlement versus T+2 or more much clearer to financial institutions. The ability to run operations 24/7, automate processes, the mainnet transparent audit records can make simple on-chain payments and settlements very powerful. He says Coinbase hits the nail on the head here, seeing challenges in RWAs as institutional players will keep using private blockchains, citing legacy infrastructure and legal concerns. So the big players going to keep using private blockchains. Coinbase, partnered with Blackrock, has an account with the DOJ, says tokenization of real-world assets is going to be a key driver for this current bull market, perhaps bringing this bull market into a super cycle, guys. Another one here, courtesy of XRP Drops, coming from, no coincidence, Coinbase partner Blackrock and their CEO, Larry Fink, on tokenizing assets being the next step.
Beginnings of a ETF Bitcoin. We believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
Larry Fink keeps saying it time and time again, this time on Bloomberg Wall Street Week. So tokenization, the next step, real world assets taking hold. The cryptocurrency market is going to look much different moving forward. Maybe this is the time when we're going to see a lot of these cryptos disappear and only the real utility assets hang on. I don't know, that's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.